Sadad, always good to have you. Give me your take on global oil prices right now, given obviously the hostilities between Russia and Ukraine, the potential for more coming. What are we going to see?
Well, good morning, David. Yeah, it's quite dramatic. I hope we don't see any squeeze on oil supply. It hasn't happened yet. I think the price escalation is mainly financial. But you also have the same problem with gas. LNG is running at $24 per million BTU in Europe and in the Far East, whereas normally it would be $4 or $5. So it's across the board. OPEC is going to continue producing, and the market supply is continuing to be abundant. The Europeans, however, have to figure out how to deal with their own shortfalls. They have not built any inventory in gas. They have very little inventory in products, and they have to try to sort out their volumes. This is where the real problem is.
Yeah, it's interesting, and we pointed this out. That is a problem perhaps of their own making as well, isn't it, Sadad, in terms of the move to renewables, which many obviously applaud, but perhaps a bit too fast to decommission a lot of nuclear plants as well.
Well, absolutely. You can't fly with wind turbines and batteries. You can't run ships on those either. And that's what is bringing out the strategic importance of liquid hydrocarbons. You know, this whole gas problem that Europe is facing, it could be turned around to be an asset. They could find this way through gas to negotiate with the Russians. They don't have to be victims. They can set parameters. They can buy the gas from the Russians on spot market pricing. This could be the way to negotiate themselves out of the predicament they're in. They are big gas consumers. There's no doubt about it. And there isn't enough LNG elsewhere in the world. So pipeline gas is probably their best option, and they need to focus on that.
Sadad, in terms of the oil market specifically, OPEC Plus continues to hold steady on its output levels. Saudi Arabia could potentially be ramping up to millions more barrels per day, is not planning to do it. Other OPEC member countries voicing similar sentiments over the last couple of days as well. With oil closing in on $100 a barrel, what would it take for those output levels to actually increase, especially given the fact that we do see this geopolitical angst around Ukraine and Russia?
Well, Morgan, you're right. Saudi Arabia does have spare capacity, and putting all the OPEC and OPEC Plus together, there's probably something like 3.5 million barrels of available capacity if it was called for. The premium on the price is more about security of supply rather than shortage of supply. The products are available. The oil could be made available. OPEC is committed to continuing to increase its supplies. So, yeah, it would be produced if it's called for. I don't think they've seen a real shortage in demand yet. So that's probably what's holding it back.
Sadad, what do you think explains the back end of the curve? Why are people pricing in 80s for the back half of the year? Is this wishful thinking? Is it a projection that at some point demand will actually get destroyed?
No, I do agree with you. It is wishful thinking. We're in for a long stretch of higher oil prices. There haven't been enough investments. I think the IEA reported more recently than a couple of months ago that the investments have been running about $350 billion a year. On average, they should have been about $550 billion a year. So the capacity investments have been short. And in the long term, it's going to take a while to build up that shortfall. So I think we're going to be in for a elevated price, probably around where it is now for maybe 3-4 years at least.